After stepping up to help their organization steer through one of the toughest business environments in memory, many leading finance teams are starting a new conversation. They're looking for ways to keep the momentum going. The relentless focus on containing costs and on maintaining liquidity has left many businesses leaner and meaner than ever before, and now they're considering growth again, cautiously. But how can corporate finance take the fight into an increasingly growth-oriented environment while keeping costs at bay?
With us to answer that question and many others is Stephen Hill, Vice Chair for Strategic Investments at the tax and advisory firm KPMG LLP. Thanks for joining us this month, Stephen.
Glad to be here, Becky.
Well, over the past few years, I've heard our viewers talk about the new normal. It sounds to me, at least, as if many companies worldwide have had to come to terms with a combination of greater uncertainty and increased regulation, haven't they?
Yes, Becky. Our clients ask us that question a lot, and what we tell them is that the economic uncertainty of the Western markets and the growth in a lot of our Asian markets provide a lot of opportunity for choices, strategic and tactical. But those choices are part of a larger portfolio of choices to be made. Becky, the reality I think that a lot of our organizations today face is that there are a lot of dynamics playing in four key dimensions. I think economic uncertainties and disruption can be a big factor for a lot of our interviewees in the survey that we recently did. The political landscape, including regulation and taxes, is another huge area of change. In fact, I would tell you that many governments today are leveraging regulation and tax to adjust their own competitive positions as sovereign nations. I think technology is a tremendous area of change. Cloud, social, mobile, these are all forces that I think our clients are contending with and their customers are contending with. And social issues are also dramatically changing the landscape of many companies today. Not just the way that customers are behaving, but also the demographics of their workforce and of their customer base. Aging populations, supply of talent, preference is all being molded in a very global way today. I think regulatory, technology, social, i.e., workforce implications, as well as political forces, all affect our markets that we're playing in.
But it's not a case of one size fits all, is it, Stephen? I mean, the situation and the challenges seem to shift from country to country and even from company to company, don't they?
I think political factors will make a big difference on not just where you play, but how you play, and certainly regulation and tax. So in terms of the political landscape, I think a lot of governments today are leveraging regulatory issues and tax as levers for change. And look, financial executives know about tax. I mean, I think every CFO understands taxation and how to try to get to optimal tax structures. But at the end of the day, that's a pretty dynamic environment where CFOs and other financial executives have to look at that changing game board on how tax will affect their tax rates and structures globally.
I've heard politicians say never let a crisis go to waste. So I suppose that some businesses are considering, or should be considering, how to use these uncertainties and changes to their competitive advantage, right?
Becky, I think a lot of companies can create a competitive advantage from a lot of these uncertainties by looking at those forces strategically and finding ways to address their own current structures in different ways. In other words, change the way that they have been operating heretofore, looking at customers with data and analytics as a tool in new ways. A lot of firms are looking at those things today in a very dynamic way. So Becky, according to a study we did of 910 C-level executives in US-based multinational firms, 93% of those executives said that their companies were in some state of transformation. So there's a lot of folks thinking about transformation and thinking about competition differently as a consequence. And as a part of that survey, of the 93%, they totaled somewhere in the neighborhood of $30 billion of spend over the next several years for transformation efforts. It's a big number.
Let's make sure I understand you, Stephen. What exactly do you mean by transformation?
So Becky, transformation is a word that is sometimes overused, but for me, transformation is pretty simple. It's making change to the organization where incremental change isn't good enough. And transformation, by definition, means change. So how does an organization change their business model or change the way they relate to customers to serve them better or to operate better going forward? Those are the things that I think embody the word transformation. And it typically starts in the back office and then works its way oftentimes to the front office. But a lot of times transformation is approached as a cost-cutting or an efficiency play, and then works itself into, well, if we're doing things better, how can we leverage resources that we free up or time from a management standpoint that we can free up to look at our customers differently, to attract either new customers or to create new services for existing customers to drive revenue growth. As companies go from the back office to the front office, one of the lever points is oftentimes the supply chain. A lot of the supporting functions are a good place to look for cost efficiencies. But at the end of the day, the supply chain can be a place for pretty dramatic change in terms of how customers get their value from you or their products from you, and the speed in which and the responsiveness and the dynamic ways that you can serve them, and the markets that you actually serve. So you can grow into whole new markets with supply chain advances that you might not have currently in your organization. And one of the implications of supply chain that I think is notable is that most supply chains, particularly for multinational firms, is very global. And I think that the notion of a global supply chain is an important aspect of consideration for transformation. Business models will evolve as your footprint and your customers broaden in geographic scope. And so I think that the idea of how you might consider your supply chain, your suppliers, your endpoints, how you distribute, it can be greatly affected. And technology, by the way, is an interesting point of potential disruption and opportunity for how you evolve your supply chain globally, Becky.
Well, with all the changes that are going on to markets, to opportunities, I've got to ask you, is it really possible for executives and their companies to look forward for 5 years?
Yeah, Becky, no one can predict the future accurately. If they did, they probably would be retired from predicting the future awfully soon, because they would have no choice but to retire and all that wealth and go to a beach. The reality is you can't tell what's going to happen in the future, but you certainly should frame questions to the organization that help you address the important dynamics of what will be considered in the future. For example, your clients. I mean, at the end of the day, a lot of organizations, including my own, define our own value by the needs of your customers and how well you serve the needs of your customers. How are those needs going to evolve over the coming years? How will their political environments, how will technology, et cetera, how will social dynamics change the way that they want to buy your services or the services themselves? How will they modify or evolve the products that you're serving them? Taste is an amalgamation. I mean, what consumers think today is good in a cereal box may be different in 5 years what they want in a cereal box. The whole notion of health versus sugar content, et cetera. Cars. I mean, look at the technology that goes into cars today. And what I might have thought was really cool 5 years ago in a car, in 5 years from now will be blasé. It will be completely potentially antiquated. Apart from the most important thing, which I think is at the end of the day your customer base and your clients, think about competitors. I mean, what are your competitors doing that you might learn from or avoid, right? I mean, I think there's a lot of value in some cases to be first to market. But at the end of the day, first to market, if you're followed very quickly by a second competitor, that advantage diminishes over time. And sometimes that very rapid follower might see mistakes made by that leader that they can capitalize on. And sometimes, again, depending on the window of opportunity, that second position's the first loser, right? It just depends on timing.
Well, if the recent past is any indicator of future events, wouldn't you expect that technology is going to continue to play a major role in any transformation effort?
Yeah, Becky, I think that technology will continue to play a significant role in transformation going forward. In fact, there's no indication to me, and I think to a lot of the 910 respondents to our survey, that technology is going to slow down in that regard. In fact, almost a third of our respondents suggested that technology was one of their main motivators for transformation. But when you think of things like cloud, social, mobile, sometimes often referred to as SMAC, I mean, these technologies are incredibly powerful for driving efficiencies in your operation, improving the way you actually can look at your customer base and know their needs and address those needs, but also the customers themselves. I mean, they're leveraging technologies in ways that affect the way that they consume your services or your products that shouldn't be ignored. And when you think of the world of data, that's a pretty extraordinary concept. Both structured data, which is in sort of the four walls of the organization that a lot of our CFOs and financial executives manage well, but also the unstructured world of data, which is a lot of the web-based stuff that I think CFOs and other financial executives will, in the future, leverage a lot more. That data picture is crescendoing, and in the next 2 years, we'll create more data, structured and unstructured, than we've had in the history of mankind. And so when you couple that with analytics, the power that you can bring to bear is pretty awesome.
So far, Stephen, this discussion has been very interesting for me and for our viewers, but as corporate financial executives, many of them are probably thinking the same thought that I am. What role do or should financial executives play in any transformation initiative?
I think, Becky, that the financial executive community has an incredible role to play in transformation. In fact, perhaps one of the more important roles. Look, at the end of the day, transformation is an enterprise-wide phenomena, done well. And there are a lot of aspects of transformation that require CFO involvement at a minimum, leadership in most cases. The first is setting the context. What is the imperative for change? That is oftentimes a financial conversation. And the dollars and cents of how an organization will progress in the future is going to be a pretty clear indicator of a need for change. Also, managing the activities around transformation. So the alignment that they have with the different constituents in transformation, very notably the CIO, the Chief Information Officer, I think is very, very important. But everything in transformation needs to be, I think, carefully planned and measured for progress. And the executive in the C-suite that is most well positioned for, I think, appropriate measures of progress and outcomes is the Chief Financial Officer and other financial executives. So I think the role that the financial executive plays in transformation is central and critical.
You're correct. Everyone wants the financial executive to measure the results of the transformation effort. But to what extent are or should financial executives be involved in developing and executing the transformation strategy?
Becky, the way that you get transformation initiated and how leadership creates the path for a transformation is very important. The first thing is transformation is a journey, and I think to set the context that it's not going to be a student body left or a very quick quote incremental move is important. But the leadership and the CFO is going to be central to a lot of this. Has to set the imperative for change. What is the rationale for doing something different than we've always done to get to where we are today? If that's not clear, the energy and the drive to make changes happen are going to be pretty diminished. Once you have the imperative, you got to set a strategy for what the change should look like. So you've got an imperative, you need a strategy to say, here's how we're going to do this. And then once you have that strategy, you got to break down silos. You got to start to bring together different agendas and constituents in the organization so that you have a team that represents the interests of the C-suite to actually make it happen. And I think lastly, that executive team, and again, the CFO can be central to this, has to continue to promote during the course of transformation diligence and energy to continue the fight. At the end of the day, cheerleading and espousing the message and getting the troops riled up, if you will, is oftentimes the responsibility of generals in battle. And I think the same thing has to happen here in a corporate context relative to transformation.
You know our viewers' businesses. After all, many of them are your and your firm's clients. Their workforce and their customers cut across borders and time zones. To what extent do you need to consider soft factors like culture and history in your transformation effort?
Yeah, absolutely. I think as you think about a global marketplace, you have to consider a lot of the forces we talked about earlier, political, regulatory. One of the things you got to consider from a social standpoint is culture. What distributors might value and how they feel, motivated in the U.S. marketplace may be very different than in the Chinese marketplace, for example. And the pressures that they face will be very different. Their customers will be different, so what their customers care about in terms of speed. U.S. clients or U.S. customers probably want things a lot faster than perhaps in developing countries where just getting access to the services are good enough. So your price points will have to be thought through very carefully, because giving them the service and giving access to service, you can price it the same way potentially, but the time may be much longer, and it may not be such a factor for somebody in a developing country as opposed to a developed country.
Well, a few minutes ago, you told me that one of the objectives was to use these uncertainties and changes to an enterprise's competitive advantage. But I'm curious, Stephen, how do we know if we're successful? In fact, how do we measure the value of a transformation?
Becky, I think the notion of success and transformation is often ambiguous. And I think it's important here for CFOs and financial executives to really help their teams understand how to be tangible about success. First of all, with that imperative and that strategy, part of the exercise of strategy is to determine where you want to wind up going. And that should define the principles of success for the initiative. Those principles should translate into financial outcomes. Revenue, cost, shareholder value, whatever the amalgamation is, return on investment, that should be part of that story, that narrative. At the end of the day, that transformation, because it's a journey, not a one action snap fit, inherently needs milestones. So you take those outcomes that you project out several years, and I think a 3-year projection is, for many organizations, a prudent but yet ambitious way to look at time relative to transformation. Take those milestones and start breaking them down into milestones that are more digestible so that you can course correct. The analogy would be a ship crossing the Atlantic Ocean. You put your dead reckoning chart down, and then you use milestones, waypoints, to figure out whether you need to go to the port or to the starboard to get back to your dead reckoning line. I think the CFO is central to this, because a lot of the disciplines of measurement and of success in those milestones will be based on financial measures.
Now, a lot of people are shaking their heads and agreeing with you, Stephen. Maybe they're in companies that have actively assessed the need for a business transformation, but they've postponed or haven't started, for some reason, the implementation of transformation. Is there a first step that they should take?
Transformation can be overwhelming. And I think a lot of organizations can hesitate and become confused with the ambiguities and the dynamics of the current state, right? I think what has to happen is, and I mentioned this earlier in the discussion, very importantly, is to set the proper context for change, which is around the imperative. If you don't articulate why what you have done for the last X number of years, or it could be in some cases 100 years, if you don't articulate well why that might not be the recipe for future success, then that's problem number one. So I think you got to set the context correctly. And then I think secondly, and very importantly, set the strategy for how to close the gap between what that imperative will result in if nothing is done, and what you need to do as an organization to close the gap to continue success going forward. I think those two things are really important to getting started well and maintaining momentum during the course of a transformation effort.
Well, over the past few years, our viewers have been asked to do more with less, and they have numerous compliance deadlines that they're regularly expected to meet, from tax returns to the quarterly close. How do you expect them to consider and complete a transformation process?
One of the outcomes of transformation ought to be that you're prepared for the next waves of disruption and change in the future. I mean, at the end of the day, in my opinion, if you have a strategy that creates a situation where you're less agile at the back end, that's probably a strategy that you should revisit. In my opinion, being ready for continued disruption in the marketplace and accelerated change is one of the things that should be in the minds of all executives as they go forward in transformation.
Well, you've certainly covered a wide range of topics for us this month, Stephen. I mentioned that our viewers already feel busy and overworked. If they could take one thought away from this program, besides reading your article in Financial Executives magazine, what would you like that to be?
So Becky, if I were to take one thought away around this notion of transformation, it is that transformation done well is a journey. And my personal background as a strategist, and I tell my clients the same thing. A strategy may be amalgamated in a document, but the value of strategy is the process. And I think transformation is no different. I think, there are destinations we'll get to relative to financial measures and business outcomes, but it's a journey over many years that I think CFOs and other financial executives have a huge role to play in helping their organizations execute, stay focused, and be committed to outcomes that everyone, including their customers most importantly, will think are fantastic.
KPMG's Stephen Hill, thanks for bringing us up to date.
Becky, it's been my pleasure. Thanks for having me.